Hello, I'm Debbie Bell-Hosking for Finastra TV, and I'm joined by Robert Downs of Finastra and Prakash Pattni, IBM. We're talking about lending modernization, a topic that covers digitalization gaps, cloud innovation, data knowledge management, regulation, and competition. But first of all, let's say hello to our guests. Welcome to you both.
Hi, Debbie. Thank you.
Thank you, Debbie. Great to be here.
Great to have you here in our studio. First of all, Robert, over to you. We're talking about lending modernization. What would you say are the key drivers and challenges that banks are facing? But also, what are the outcomes that they are aiming for?
I think they're manifold. Obviously, key to a lot of the drivers is cost and efficiency. I think banks are looking for a more efficient digital journey through all of their products front to back. I think they're looking for synergies from understanding their client from the origination process through to booking and onboarding, through to settlement, and actually then obviously processing the life cycle of that loan. I think one of the things we've seen with the new generation of people coming up through the industry from university and colleges is that there is a different expectation in how they use applications, how they use software, and I think people are struggling to maintain that knowledge. I think there's been a general belief that the lending industry is not getting much younger. There's a lot of people who've been around for a long time. It's a very small world, people will say often around corporate lending, and I think the need to try and encourage that growth of the younger generation, keep that knowledge, transfer that knowledge from the existing people to the new group as well is one of the biggest challenges. I think consistency of business is, I think, one of the key outcomes for the banks.
And also, I mean, it's so interesting to hear you talk about the next generation. Thank you so much. And of course, for the next generation, they're growing up with data. So let's talk about data in the lending industry. What are the problems you see there? And also, do we need to define how we share data and information?
So I think there's two aspects I'll touch on. One is the unstructured data problem, and the second one is the security side of things. So if you think about corporate lending process, you could end up with hundreds of potential parties that are involved. All of them have different systems of record. They're all entering data in slightly different ways. So as Robert was saying, it's a very manual process, relying on spreadsheets, on people, on paper really. So you have this, one is the structured or the unstructured data problem. Linked to that, often you're operating in multiple jurisdictions. So again, different regulations and sovereignty and data residency issues come into play. And then moving on to the second issue around data protection, there's all this data which is in lots of different locations. How do you ensure that data stays protected? If it gets into the wrong hands, you're liable for fraud. There's issues around fines if you don't comply with certain regulations, etc. So I think those are the two main issues I'll touch on. But back to your original point around, is there a way around this? My personal opinion, seeing if Robert's got a different view, is I don't think so. There's so many parties and so many different jurisdictions, it would just be really complicated to solve that by coming out with a common standard, common template. But I do think that technology that we have can help solve a lot of this. I know we're going to talk about that more shortly.
Absolutely, we will talk about technology. But you were asked, do you have a different thought on that?
I agree that I don't think you can create a standard definition for what a loan is. I know that there are variations of industry standards out there, but I think particularly when you talk about the more complex lending space, the large-scale syndicated lending, they live and breathe off being bespoke. That is one of the challenges. It's what makes them such an in-demand product. I think vendors do need to collaborate. We do need to share with each other. I think technology has historically been part of the problem, but I don't think the technology is the problem solely today. I think a lot of that concern over privacy, data security is leading people to still shy away from joining collaborative groups at this point.
Well, let's go back to that technology. Modern technologies, we've got AI, cloud, automation. How are they transforming lending processes and products? And are there easy wins here for banks?
So I think there's a spectrum here. So I think on one end of the scale, you do have things like standardized APIs that can be used to transfer data between systems. You've got OCR, optical character recognition systems, which can take data and pre-populate templates and things like that. But again, these aren't really transforming, they're just taking existing processes and automating aspects of them. And then you could go on to platforms like IBM spent a lot of time building its IBM Cloud for Financial Services with embedded controls and security and confidential compute and things like that, which allow you to move that type of sensitive data to the cloud. But again, that's a platform play to allow you to move different types of solutions onto that platform. I think you can go to hybrid cloud type solutions. So we touched on data residency and sovereignty, for example. I think there's a movement away from data lakes and centralizing everything and more towards creating data fabrics or meshes, so the data stays where it is and you process it locally. And then all the way through to Gen AI, right? So Gen AI, I think, could be applied to anywhere from origination to KYC, know your client, to anti-money laundering, to fraud, to portfolio management, all of these different things. But with that comes risks that, as we talk to clients, they're doing POCs, they're testing the water, but they're still concerned about things like what's going to happen to my data? Is it going to get absorbed by this model and used elsewhere? So we've seen this move away from general purpose models to very much more targeted, tuned models for your industry. How do I explain how the decision was made? Was there bias introduced in that? So all of these types of questions are coming through, but I think it's there's definitely a lot of opportunity for AI, but I think, as Robert was indicating earlier, I don't think it's just about the technology, it's about the people, the process, all of these different other aspects that you need to consider.
Thank you, Prakash. And Robert, earlier you spoke about collaboration. So can I ask you, what is needed for an effective collaboration between two or more parties? And what do banks need? What are the steps to modernize?
So I think in the loans industry today, particularly at the more complex syndicated end, there are a number of market initiatives out there. We've got Finastra's own Lendercom, as well as Versana in the US, who are both opportunities looking to create a collaboration network across the syndicate banks. I think one of the key things is people need to participate, full stop. I mean, that's the main point. We see people saying, I'll join when they join. And it's, well, to be honest, if that happens, nobody will join. So I think a desire to engage needs to be there. And I think when you look at AI, I think there certainly are short-term solutions for AI where people can be solving tactical paper problems by looking at a piece of paper and applying Gen AI to it. But I do wonder whether that just encourages a more short-term view of where AI could benefit the bank, where essentially you're embracing the paper in the process rather than what we talk at the beginning, the purpose is digitizing the paper out of the process altogether.
All right, thank you. Do you want to add to that at all?
I think a couple of things that have been raised by our clients related to this. So there is a willingness to use other partners, be it the likes of Finastra or fintechs and other organizations. So there's more of a willingness to buy rather than build themselves. Some of our clients have invested in automating certain parts of the process, and they'll work with these startups, fintechs, etc., to maybe solve a very focused, specific area of the problem. But again, with that, we're also seeing these concerns being raised about they're aware bad actors are increasingly targeting these third parties for their vulnerabilities to ultimately get access to banking systems. So there's a need to make sure this digital supply chain ecosystem is highly secure. I think that was one of the issues. Regulators are also getting concerned about this with things like concentration risk and whether partners are all using the same provider on the same cloud, for example. So there's, I think, a much larger willingness to use partners, but I also think there's additional risks that come with it, which can get mitigated, and many of us are working on that. So I think it's really critical to work with partners that you trust, partners that have domain expertise, like sort of Finastra, IBM, and I think can help you navigate through this.
I would completely agree with that. I think collaboration across the big industry players is what's really, really needed, and I think Finastra takes it to its tagline, the future of finance is open. That means we have to be open to other people engaging with us, and we have to engage with other people. I think that over time builds trust. I think people need to not be afraid of the future. I think if we're going to move to the future, we all need to embrace it a bit more.
Lovely. Robert and Prakash, thank you. So good to have you both in the room. Thank you very much.
Thank you.
Thank you.